Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Bank of India's performance as on 31st December 2025. Bank of India Quarter 3 Financial Year 2026 results a story of growth, strength, and digital transformation. December 2025 was not just another quarter for Bank of India. It was a quarter where numbers spoke confidence, asset quality reflected discipline, and digital banking showed the future. Let's break down how Bank of India delivered a strong quarter 3 financial year 2026 performance. Balance sheet growing bigger, growing smarter. As of 31st December 2025, Bank of India crossed a historic milestone. The bank's global business crossed rupees 16 lakh crore, reflecting strong momentum across lending and deposits. Global advances grew by 13.63% year-on-year, with domestic advances growing even faster at 15.16%. While overseas advances registered a steady 5.70% growth, the real engine of expansion was domestic India. Retail lending surged by 20.64%, agriculture advances grew by 16.69%, MSME advances by 15.77%, and even corporate advances posted a healthy 11.32% growth. Together, retail, agriculture, and MSME now form 58.54% of total advances, clearly showing a shift towards safer, diversified lending. Deposits, trust of millions. Growth was not limited to loans alone. The bank's global deposits increased by 11.64%, with domestic deposits rising by a strong 12.80%. CASA deposits grew by 4.48%, and the CASA ratio stood at 37.97%, reflecting a stable low-cost deposit base despite a competitive interest rate environment. This clearly shows customers' continued trust in Bank of India. Profitability, turning growth into earnings. Growth is meaningful only when it converts into profits, and Bank of India delivered. For the first 9 months of financial year 2026, operating profit rose to rupees 12,023 crore, while quarter 3 alone delivered rupees 4,193 crore, a 13% year-on-year jump. Net profit for quarter 3 financial year 2026 stood at rupees 2,705 crore, growing 7% year-on-year, while 9-month financial year 2026 net profit rose 14% to rupees 7,511 crore. Net interest income strengthened to rupees 6,461 crore in quarter 3, supported by stable margins and growing advances. Non-interest income showed sharp traction, growing 30% year-on-year in quarter 3, driven by fees, commission, and treasury income. Margins and returns. Efficiency at work. The bank's net interest margin improved to 2.57% globally and 2.80% domestically in quarter 3 financial year 2026. Returns also improved meaningfully. ROA increased to 0.96% and ROE passed 15.34%, reflecting efficient use of capital and better profitability metrics. Asset quality stronger than ever. One of the biggest highlights of this quarter was asset quality. Gross NPAs reduced sharply to 2.26%, improving by 143 basis points year-on-year. Net NPAs stood at a comfortable 0.60%. Provision coverage ratio improved further to 93.60%, giving the balance sheet strong protection. Slippage ratio remained extremely low at 0.16% in quarter 3, and credit cost dropped to 0.34%, indicating controlled face stress. This clearly shows disciplined credit monitoring and strong recovery mechanisms. Capital strength, ready for the future. As of December 2025, Bank of India's capital adequacy ratio stood at 17.09%, well above regulatory requirements. With CET1 at 13.76%, the bank is comfortably positioned to support future growth without immediate capital stress. Digital and alternate channels. Banking of tomorrow. Digital banking continued to shine. During Q3 financial year 2026 alone, over 7 lakh new UPI customers were added, taking total UPI users to 242 lakh plus. Almost 96% of total transactions are now happening through alternate digital channels. This transformation highlights Bank of India's strong push toward convenience, cost efficiency, and customer-centric banking. Conclusion: Q3 financial year 2026 was a quarter where growth, profitability, asset quality, capital strength, and digital adoption all moved in the right direction for Bank of India. With improving margins, falling NPAs, strong capital buffers, and rapid digital expansion, the bank has positioned itself well for sustainable growth in the coming quarters. This was not just a quarterly result, it was a statement of stability and progress. Thank you very much for your patience. Request to like, subscribe, and share.